in that interview that Besant had with Jesse Waters, he said one interesting thing, right? Outside of the whole Fort Knox thing, that's what the interview was about.
Right.
What did he say? He said, gold in the past has backed our currency from time to time. But before gold, silver backed the dollar. It's like, okay, I'm looking at this and I don't want to put too much meaning into words, but words have meaning. Why did he bring that up?
Well, it's great to have Dr. Kirk Elliott back with us once again every week. Just amazing updates. We got a big one for you today. amweknow.com/gold in the description box below. All you have to do is click on that link. They'll take care of you. You'll be prayed with also if you need prayer. Welcome back.
Oh, it's great to be with you.
Yeah, it's amazing. Just day after day, of course, every week we've got new things going on, and it's hard to keep up with for sure. But you're definitely keeping up on the monetary stuff. We had some big ones this week.
We did, and a lot of people would probably just overlook some of these things that were said, but I want to put together some of the puzzle pieces because I think it paints a big picture moving forward. So, Fed President, the chairman of the Fed, Warsh, he pledged this week that there's going to be a regime change at the Fed to rid inflation and the tax on American people. Well, isn't this what we've been talking about for years now? Is that inflation is a tax on people? And now you've got the Fed chair that's saying, that Trump appointed that says this is what they're going to do. There's going to be a regime change, right? So,
right.
I shouldn't say that Trump appointed him. Trump nominated him and he was appointed, right? But here's where it gets a little bit squirrely, right? So going back to what we talked about last week, how the employment numbers were looking really bad. Interest rates were sky high, making housing unaffordable. So I think by the end of this year, we'll probably get one rate reduction. But moving forward, what does he say? We're going to rid inflation, right? So how does the Fed rid inflation? Two ways. They stop printing money, which isn't going to happen, or they start to raise rates to slow down those inflationary pressures. Because here's where it starts to get interesting is this is not a function of the domestic economy. This is a function of the global economy. And the global economy is in debt up to its eyeballs. It's in an inflationary death spiral. So you're going to have country after country after country that starts raising its rates. The United States is going to have to do the same. Why do they have to do the same? To stay competitive. This is the basis of currency wars, because if Japan raises its rates, well, they're going to start to get more capital inflow because there's a higher yield, right? There's a reward to the risk that people are taking. Then the Eurozone is going to say, this is just an example. It's like, wait a second, we used to be getting money, but now it's going to Japan. We're going to raise our rates too. Then the United States will do the same. Now we're all on an equal playing field again. Somebody's going to start raising rates again to get more capital inflow. See, this global inflation is the beginning, I think, of higher rates down the road. Now, I don't think it's going to happen this year, again, because we've got bad economic numbers. It's an election year. I think they get one rate reduction by the end of the year, but moving forward, they start raising them. Now, what is this going to do to the markets? Right? I think the bond market's toast.
Yeah.
When you have rising interest rates, the value of bonds comes down, so that's not good. I think that's going to put pressure on the stock market as well. So the two traditional asset classes that people invest in, I think moving into 2027 are going to be very, very stressed, which normally rising interest rates are not necessarily good for gold and silver, as we've seen over the last 3 or 4 months.
Right.
However, like we've talked about, that narrative is going to shift because there's going to be a flight for quality, and people are going to want something that's tangible, that's real, that they can count on, right? So that then shifts this narrative more towards gold and silver, not just in America, but globally, right? And I think we saw a glimpse of that this week, right? So I don't know how many of you saw the interview that Scott Bessent had with Jesse Waters on Fox. So what did Bessent say? He said all the gold in Fort Knox is accounted for.
Yeah.
Well, okay. Number one, I don't necessarily believe that. Have an audit. Don't just have somebody say it, right? And I'm not saying that I don't trust, but you've got to trust but verify, right? Yeah. So it's like, is it all there? And then he says we've got the largest stockpile of gold in the world. It's $1 trillion. Okay, so let's put that into perspective a little bit. So what if they have $1 trillion worth of gold? We in America today, there's $39 trillion of federal debt. So even if it's $1 trillion, it's a drop in the bucket compared to just the debt we have. Now you compare that to the amount of money that's been created, it's even a smaller drop in the bucket. It's like a pebble, right? So here is where, how do you start to fix that? Well, how about revaluing gold, right? So number one, they could change it from the arbitrary $42.02 an ounce that the Fed values gold at to market prices, which is $4,000. But then it would probably have to go even further if you're going to start to look at gold like other countries are, which is, and central banks around the world, which they're using gold as collateral, right? They're allocating gold into their central bank reserves to use it as collateral so they can continue to lend.
Right,
so right. I think what Bessent said was almost like neither here nor there. But what he didn't say, I think, is more important. And that is, they're saying that gold is there. There's only $1 trillion when we've got $39 trillion worth of debt. There's already been talk of them revaluing gold. So to stay competitive with other central banks, maybe they will really revalue gold over and above the market prices, because you have to start legitimizing a currency that's being devalued and debased all over the world. Right. So this is the de-dollarization of the world that's happening. Now, to the interest rate story and bonds that are collapsing, what else is a bond? It's not just like corporate bonds. But US treasuries are a bond. The 30-year treasury, that's a bond.
Right.
Those interest rates go up, the value of those bonds comes down. Couple that with the world wanting to dump their US treasuries, I think the demand for US dollars is going to go away, which is why the head of the Dallas Federal Reserve Bank said, you know what? We're also recommending that we have modestly higher interest rates. This couples with what we've been saying that, and what we just said, I think interest rates go up in 2027. I think Fed President Logan is saying the same thing. Probably not this year though, right? But all the signals are in place that we are going to have rising interest rates next year. And that's going to put a big damper on things. So when you start connecting some of these puzzle pieces, yeah, the stock market's overvalued. The AI shares are significantly overvalued. You're already seeing a mass exodus out of AI shares right now, right? Is when we talked about that bubble bursting in light of everybody's moving towards AI. Why wouldn't the prices go up forever, right? Because it's a bubble. It's overvalued. It doesn't mean that they're not going to go up again, but the prices need to correct, just like gold and silver corrected over the last few months. These are just normal things that happen in a market. But what you want to do is, if you love stocks and you love AI, well, buy on the dip, right? Just like if you love gold and silver, use this opportunity to buy on the dip, because I don't think they're going to stay here very long, right? So moving forward, to where, not to rehash an old story, right? But to actually verify and validate a story that you and I talked about 2 years ago, 2 years ago. We talked about Project Enbridge. Remember that? I mean, it was, I don't know if you remember it or not, but it was literally like 2 years ago.
Yeah.
It was a coordinated effort between China and the BRICS nations and the Bank for International Settlements to develop a settlement mechanism that's going to be used for central bank digital currency. So you don't have to just settle in US dollars, right? Because with the dollar being the world's reserve currency, the BRICS nations certainly want to get rid of that, right? So they started this project, kind of like what XRP and Ripple do. They provide international settlements like almost for free, very, very quickly. So you get rid of the SWIFT system and bank wires, right? So Project Enbridge kind of does the same thing. It's a settlement layer between countries to actually get rid of the US dollar to provide other options that you can settle in. Now, here's where it gets interesting. If it's just other options, like let me put it this way, like the Bible says there's one way to heaven, right? It's to accept Jesus, right? So you've got Jesus and you've got like every other God with a small g on the planet, right? So there's one way, there's all kinds of different things that people look to for their faith, right? When you're looking at international settlement, it could be one, the reserve currency, or anything else. Project Enbridge allows for anything else. It doesn't have to just be the dollar. It could be the euro. It could be the BRICS currency. It could be gold. It could be silver. It could be any other commodity. Right, which is why I think what this project is, which is going to be used for nefarious reasons, right, for central bank digital currency, which we don't want. I think that's the mark of the beast.
Right, of course.
It provides this platform to accept other things other than the dollar for settlement. Now, in that interview that Besant had with Jesse Waters, he said one interesting thing. Right, outside of the whole Fort Knox thing, that's what the interview was about.
Right.
What did he say? He said, you know, gold in the past has backed our currency from time to time, but before gold, silver backed the dollar. It's like, okay, I'm looking at this, and I don't want to put too much meaning into words, but words have meaning. Why did he bring that up? Why did he bring up that silver used to back the currency? Could it be because they're looking at a world where there's going to be different assets that back currencies? Silver, gold are the two, primary choices, right? But he said it, not me. Why would he bring up the fact that silver used to back the dollar and gold did from time to time? It's because we're moving into a world of collateralized assets.
That's right.
Right. So this to me is a huge sign moving forward. But there was this video that I watched this morning. Actually, I watched it this morning, and it's like a 40-minute long video. So we're not going to watch the whole thing. But there's a 2-minute section on there that I would love to watch for everybody watching this or listening. And then we'll talk about what that actually means.
Okay. Yep. Here we go.
Anchored in gold. Enbridge will accelerate de-dollarization by reshaping the settlement infrastructure underpinning global trade. Now, by enabling central banks to settle directly in digital currencies, it reduces reliance on the dollar and the default intermediary, and it compresses foreign exchange settlement chains. It creates a credible parallel rail for cross-border payments. And unlike gold, silver, or other hard asset settlement mechanisms, it gains monetary credibility and offers reserve managers, commodity exporters, and hedgers practical alternatives to debt-backed dollar paper on a much more secure, handleable basis. Now, this shift will not replace the dollar overnight, and nor is it intended to, nor does China want to do that. but it makes de-dollarization operational and investable by building alternate settlement rails outside Treasury-based reserve system. And that is structurally supportive, really, for gold, and a long-term warning that really that the marginal demand for U.S. debt, well, what's going to happen? It's going to continue to weaken as reserve diversification gathers pace. And we posted lots of examples of this last time, lots of reports from Bloomberg, Financial Times, and others. And given the pace of central bank gold adoption and a widely anticipated 15% per annum appreciation in the gold price, which is standard, the current reserve split of roughly 30% gold to 50% dollars could easily flip in gold's favor well within 2 years. And that is, most people are not banking on that. And this is why every major central bank and bullion bank is positioning long physical gold. This process is suddenly accelerating. And as internationalized zero counterparty risk gold linked settlement gains traction, debt riddled first tier treasury demand comes under severe pressure. The US will be forced to defend dollar credibility. As we've outlined last time, once competitive remonetization between China and the US accelerates, a gold revaluation becomes the cleanest balance sheet response to that. And gold-linked zero counterparty risk settlement goes straight at the dollar system's pressure point.
Wow.
Okay, so let me dissect that, because we warned about Project Enbridge and what it's going to do to the dollar 2 years ago. 2 years ago. Well, I mean, we're kind of ahead of the curve, right? But the writing was on the wall when the Bank for International Settlements was doing this. What is the stated goal of the BRICS nations economically? To de-dollarize the world, according to Putin.
Oh,
right?
yeah.
So this is part of what they're doing. Now, it's very difficult for banks to actually trade in physical gold or physical silver between each other, right? It's cumbersome. You've got to ship it. It's mechanically difficult. But what if you're just holding the gold in reserves and having an electronic settlement rail that attaches to that? Now there's other forces that can be used as a reserve currency, right? And so this is the major piece of the dollar losing reserve currency status, is there's other options. And so just by the diversification nature of central banks saying, we're not just going to hold the dollar, we're going to hold gold. Maybe we'll hold silver like India is doing, right, with their central bank. Maybe we could use any other collateralized asset that we can settle digitally, right? So as the dollar continues to lose demand, as there's other options, this one project, Project Enbridge, because it's tied to the Bank for International Settlements in China, opens the door to and connects some pieces as to why central banks around the world are now allocating into gold heavily. One thing that he said, 30% of the world's, reserve currency assets are held in gold and 50% in dollars. That's recently flipped. Gold is now the number one held asset at central banks around the world, right? So why would they do that? And why would the Basel III Accord say that gold is a tier one asset? This was done a couple years ago. Tier one meaning banks can actually settle in gold between each other. Then China took it one step further recently and said it's a high quality liquid asset, which means it's the exact same as currency, right? So you're looking at banks allocating into an ancient relic, gold.
Of course. Right? Yeah.
And Scott Bessent said, well, we've used silver before, and there's all these signals, LT. All these signals that banks are moving to a collateralized system backed in gold. Now the digital rail is there to settle in something that can be attached to physical metals. And it's like, this is exactly why we've been doing what we've been doing for the last few years, allocating into precious metals. And it's like, you don't have to own silver in the tens of thousands of ounces at a time, or million ounces at a time, or gold by the ton like central banks do, or the hedge funds do, or the big international money center banks do. You can own gold by the ounce. You can own silver in $500 increments if you want to, right? And just start allocating the same just at whatever level you're comfortable with, right? And so this is, to me, is why this narrative will shift even in a world of potentially higher interest rates for longer and raising interest rates, and the demand for gold and silver is going to go up. And the mechanics of the past, when you had higher rates, gold and silver came down. It's just kind of how it was. Because this narrative is shifting and we're at this point in time where now gold has basically overlapped everything. It's hurdled everything as the number one held asset by central banks around the world. The narrative is forced to shift to supply and demand and not just an interest rate story. So I say all of this to actually be very, encourage all of you that you are really in the right place at the right time in a moment in history when everything is changing under our nose.
It sure is.
I mean, 3 years from now, we might not have paper currency. With the emergence of central bank digital currency, with the emergence of these settlement rails that are now digital with Project Enbridge, with the decentralized ledger blockchain like Bitcoin and Solana and everything else, and quantum computing, everything is going digital. Everything.
Mm-hmm.
Now we're able to start coupling physical metals with these digital settlement rails, and it's exciting because you don't have to like cryptocurrency. You don't have to like the digital world, but when you can allocate into the same core commodity that they are, that's how you win.
That's right. Amen. Amen. Man, what a report. Oof. Feel like we just got a preaching message there, Dr. Elliott. It's absolutely phenomenal. And we know.com/gold below this video. What a great, just a great piece of information for us today. Just remember to go reach out to you guys, and also the phone numbers on that website. And you can also receive prayer if needed. And so we just appreciate you. We look forward to further updates.
Sounds good. We'll talk to you soon.